Investing through a global pandemic, 2020 case study. In today's video, we're going to be looking at the COVID-19 global pandemic and what effect it had on financial markets. And then I'm going to be telling you how I continue to invest during this period. The COVID-19 pandemic had a significant impact on financial markets worldwide. Initially, global stock markets experienced a sharp decline as investor confidence waned due to uncertainty surrounding the virus's impact on the economy. This led to increased levels of volatility, with major indices experiencing large swings on a daily basis. The pandemic triggered a steep decline in stock markets, with many indices entering bear market territory. Basically, a 20% or more decline from recent highs. At some point during the pandemic, the markets were down, and as you now know, we were well and truly in a bear market. As countries imposed lockdowns and restrictions to contain the virus, economic activity slowed down dramatically. This contraction in economic growth negatively impacted corporate profits, leading to further declines in stock markets. To mitigate the economic impact of the pandemic, central banks around the world implemented various measures, including cutting interest rates, quantitative easing, and liquidity injections. These actions helped stabilize markets and provided support for businesses and individuals. As vaccines became available and economies started reopening, financial markets gradually recovered, supported by fiscal stimulus measures and optimism about economic recovery. Many indices have since reached new all-time highs, though some sectors and regions may still be grappling with ongoing challenges. Markets were down. It was a bear market, but this only lasted a few short months due to the response of governments and central banks, the reduced interest rates, and the fact they turned on the money printers. It led to a quick rebound and markets were up, and we quickly went from bears to bulls. Right, let me tell you how I behaved during this period as an investor. Let me first take you back to March 2020, when COVID really got to grips with the world. I was in Oman. In fact, I was stuck in Oman as I couldn't get a flight home to the UK. This was the most anxious I've ever been in my life, mainly because I was worried about the safety of my wife, my kids, and other family members. Nobody knew what was going to happen, and I was thinking the worst. One of the things that got me through this difficult moment was Wim Hof videos on YouTube. I was doing Wim Hof guided breathing exercises and cold showers every day. This helped to calm me down. So this was how I was feeling at the start of COVID. But on a positive note, it didn't affect my investing at all. I didn't skip a beat during the bear market downturn and continue to invest. Let us take index investing, for example, my favourite way to invest. I've been investing into a Vanguard Life Strategy Fund since mid-2019. I spent months reading book after book and doing serious research. Eventually, I found a fund that was right for me based on my goals and risk tolerance. I decided on a monthly amount, an amount I could afford, and invested every single month. I knew I needed to do this through market ups and downs, because that's what all the experts recommend. They recommended this in the books that I read. This is basically dollar cost averaging or pound cost averaging if you're a UK investor. Experts also recommend long-term investing. When you zoom out and think long-term, market ups and downs don't have a negative impact on your mindset. It brings calmness, which is a very useful tool for any investor to have in the locker. Armed with my experience and newfound knowledge, the pandemic didn't affect me as an investor. I was calm from an investing point of view and continued to dollar cost average into my low cost index fund. The bonus is that it was a very short recession and the markets made a swift rebound. Another bonus is that I got some good returns during this period. Between May 2020 and May 2021, my low-cost index fund returned just over 20% in interest. This is how you should invest during a global pandemic. You stick to the plan. you stick to your long-term plan. My long-term plan at the time was property, index investing and crypto. Now it is the same, but I'm also back to investing in single stocks. Now I know how. Once you educate yourself and learn from the experts, you will know what to do, exactly what to do. Let's have a little recap on how to invest during a global pandemic. 1. Try routines that help you to be calm. Cold showers and breathing exercises worked for me. 2. Educate yourself on how to invest. You can learn from experts who've been investing for decades through many bull markets and bear markets. 3. Stick to your investing plan and continue to invest. 4. Think long term, and if you can do this, it will bring calmness. 5. Remind yourself of the importance of investing, how it will help you reach your financial goals. Like everyone else, I struggled through the global pandemic for various reasons, but from an investing point of view, I didn't struggle. I finally learned from my previous mistakes and had taken the time to learn how to be an investor. Anyway, I really hope this helps you going forward as a skilled investor. That's it for today's video. I'll see you on the next one.